So there are 3 benefits and 3 downsides that I want to talk about, okay? First benefit of a small trading account is that you are risking a small amount of capital. Very little money on the line. Like if you blow your $50 account, $100 account, it's not going to cause you to become homeless instantly, Just make sure that you put money that you can afford to lose, because there are people who email me and then they say, Karen, my life savings is only 100 and I want to put it into a trading account so that it can save my life. If that's your situation, don't go into trading, okay? And the second benefit is that it helps you to practice how to trade live. So you have a demo account, you're profitable at it, but then doesn't really show how well you manage your trading psychology. You will realize that when you trade on a demo account, you feel differently as compared to when you're trading a live account. When you're trading a demo account, when you lose $100, for example, doesn't matter. If you lose $1,000, doesn't really matter. But there are some people, when they trade a live account, when they lose 10 cents, oh my god, so painful. Third benefit of a small trading account is that it trains your trading psychology. Most importantly, it trains your patience and discipline. A lot of people, when they see that in their $50 account, in their $100 account, their profits are only 10 cents, 20 cents, 30 cents, it is very tempting to over leverage, very tempting to over expose your account to a lot of risk. It's very tempting to increase your lot size and then risk 10% per trade, 20% per trade instead of the 2 to 3% because the profits are so small. Then you go onto Instagram, onto YouTube, how I turn $10 into 500 within 2 days. You ask them, what is your risk-adjusted return? Not just return, but risk-adjusted return. I'm sorry, what adjusted? You mean profit-adjusted? What are you risking to generate that 50% ROI per day? If you're risking your whole entire account, is that even called trading? Isn't it quite similar to gambling? Why don't you just go to casino? It's more fun and colorful there. You know what I'm saying? I've been to casino a few times just to sit there. But the slot machines are so beautiful. And when you sit on the table and gamble with other people, okay, blackjack or something, when you win, everybody clap. When you make money in trading, nobody clap for you. You know what I'm saying? The downside of a trading account, the first downside is that because it's so small, you won't take it seriously. Studies have shown that traders who trade a smaller account are more likely to blow it as compared to a trader who trades a larger account. I can guarantee you that most of the time, most people, they are going to be more careful about the larger account. They are going to calculate their lot size properly. Then the small account, just whack! I feel like putting in 0.05 today, then just 0.05. Why 0.05? Because my aircon temperature is 25. Because the second downside of a small trading account is that if you risk things properly, like 3% or at most 5%, the profits are still very small. Like if your expenses is like $2,000, $3,000 a month and your trading profits from your $100 account, it's like 10 cents, $1, I can buy a pen. So the profits are so small that you cannot use it to buy a Lamborghini. That is not even taking into account the fees. Imagine if you pay the fees with your $10 a month profit, okay? You gotta pay for what? Commission if you trade stocks. Then bid-ask spread. Some brokers withdrawal fees. Then some brokers account maintenance fees. Then if you hold your trade for more than 1 day, what do you pay? Rollover fees, swap. By the time you withdraw, you can only take 1 sip of coffee and that's it. But then again, if you trade super short term like scalping and somehow you use market order instead of limit order, you're gonna pay so much cost in terms of slippages. Then when you scalp the news, some people scalp the news, okay? Then you're gonna pay the large spread because during news, oftentimes the spread is going to increase, right? Either way, you gotta pay the broker a good percentage of your profit. Like, are you supposed to work hard for yourself or for your broker? If you're not at a place where you can put in a lot of money into your trading account, it's okay because Some people, they're starting out, they don't have a lot of money, they start with small account, it's okay. The most important thing is you put in the patience and hard work to grow it gradually. The more you rush, the faster you're going to blow it. I can guarantee you that. Because when you're rushing to grow it, on some days, you are going to be like, there are no trades today, but I need to grow my account. So let me just force a trade. If you are an experienced trader, you can still open a small trading account to test out new strategies. So doesn't mean that if you become a millionaire trader, then you shouldn't touch small accounts. You can use it for many different purposes. And also one more thing, a lot of beginners make this mistake too. Try not to compare the ROI of your small trading account with those big boys, because there are so many day traders. They are on Twitter, Instagram, then they are like, I earn 100% a month. Better than Warren Buffett, George Soros, Ray Dalio, all these hedge fund managers. You cannot compare like that because you are trading a $50,000 account. They are managing billions of dollars. The psychology that is needed is completely different. They are on a different level. Different account sizes requires different skills. Just remember that you should never use your small trading account to quit your job within the next few months. It requires a lot of patience, hard work to grow it properly. Okay? So with that, I'll talk to you in the next video. Bye.